Click the bell icon to get latest videos from Ekeeda.
Hello friends, myself Professor Uday Bhokre and now I am welcoming you on your own YouTube channel Ekeeda. Friends, if you are watching my video regularly, fine, but if you are watching my video first time, I request you to subscribe to our channel Ekeeda and also press bell icon for your latest notifications. Today we are going to learn for CA Intercourse Advanced Accountancy, topic name Internal Reconstruction, question number 8, which is on your screen. Let's read the question. Friends, they have given you Green Limited had decided to reconstruct the balance sheet since it has accumulated huge losses. So they have a huge losses. The following is the summarized balance sheet of the company on 31/3/20x1 before the reconstruction. So they gave you the balance sheet of the company. We have to go through the balance sheet now. Share capital authorized 1,50,000 equity shares of rupees 50 each, 75 lakhs. Subscribed and paid up capital 50,000 equity shares of 50 each, 1 lakh equity shares of 50 each, 40 per share paid up. So they are partly paid up shares. Secured loan include 12% first debenture and 12% second debenture. Current liability include your trade payable. Fixed assets include goodwill, building, plant, computers. Investment are nil, current assets are nil. PL account debit balance is 20 lakhs. So your main target is to wipe off this in your internal reconstruction scheme. Let's see further. Following is the interest of Mr. X and Y in Green Limited. So they are the major stakeholders. What they are holding? 12% first debenture splitted, 12% second debenture again split is given. Trade payable are there 2 lakhs and 1 lakh. In that way, total due to Mr. X is 12 lakhs and total due to Mr. Y is 6 lakhs. They are also holding fully paid up shares, 50 shares, 3 lakhs and here 2 lakhs. Partly paid up shares rupees 40 paid up, they are also holding 5 lakhs and 5 lakhs rupees. Amount is given in terms of rupees. So these are the claims of Mr. X. The following scheme of reconstruction is approved by all parties interested and also by the court. Uncalled capital is to be called up in full and such shares and other fully paid up shares are converted into equity shares of rupees 20 each. Firstly, you will make them fully paid up by making a call and then you will convert it into 20 rupees share. Cannot I say 50 rupees ka share is converted into 20 rupees ka share? So I can say there is subdivision. Mr. X is to cancel 7 lakh of his total debt other than the shares amount and to pay rupees 2 lakhs to the company and to receive 14% first debenture for the balance amount. So Mr. X is to be settled other than shares. Next, they have given you Mr. Y is to cancel rupees 3 lakhs of his total debt other than equity shares and to accept new 14% debentures for the balance. The amount thus rendered available by scheme shall be utilized in writing of the goodwill, profit and loss account and the balance to write off the value of the computer. Importantly, I want to go back to point number 1 again. Uncalled capital is to be called up in full and such shares and other fully paid up shares are to be converted into equity shares of 20 each. It is not a subdivision, it is reduction. 30 rupees shares are cancelled. So we will complete the entries accordingly. What is requirement? You are required to draw journal entries to record the same and also show the balance sheet of the reconstructed company. Let's go ahead with preparation of journal. In this, firstly, they have given you claims of these two parties, X and Y. That's fine. Following scheme of reconstruction is approved by all parties interested and also by the court. Uncalled capital is to be called up in full and such shares and other fully paid up shares are converted into equity shares of 20 each. That is, they are reduced to rupees 20 each. That means they have sacrificed 30 rupees which will be transferred to capital reduction. So let us pass the interest firstly for making a call. Second is for receiving the call. Third one is for reducing the share capital. So these three entries will come one by one. Friends, you can notice there are 1 lakh equity shares of 50 rupees each. 40 per share is called up. So your uncalled amount will be 10. So I will make a call of rupees 10 per share. Continue. Friends, you can notice it is an entry for your final call. Share final call account debit to equity share capital account. We made call on 1 lakh shares at rupees 10 per share, being final call on equity shares. Thereafter, we will receive the money, for which we will pass the another entry bank account debit to share final call account. Friends, you can notice the entry bank account debit to share final call account, being final call money received. Thereafter, they have reduced their shares to rupees 20 each. So we have to pass a gross entry, that is 50 rupees share account debit to 20 rupees share account, and remaining amount we will transfer to the capital reduction. So let us record the entry. Continue. Friends, you can notice our entry for reducing equity capital. Equity share capital account rupees 50 account debit to equity share capital rupees 20 account credit, and remaining amount to capital reduction account. We were having all together 1,50,000 equity shares, that is earlier 50,000 fully paid up shares and 1 lakh partly paid up shares. In that way, total 1,50,000 shares of 50 each are reduced to 1,50,000 shares of rupees 20 each. So remaining amount we have transferred to the capital reduction. Let's see the next transaction. Number B information says Mr. X is to cancel 7 lakh of his total debt other than share amount, that is he is going to cancel this 12 lakhs and pay rupees 2 lakhs, plus he will pay you 2 lakhs, that means total due comes to 14 lakhs, and to receive 14% first debenture for the balance. Out of total 14 lakh dues, he is going to cancel 7 lakh, and of course remaining 7 lakh is to be paid, for which we have given 14% first debenture. So firstly, whatever amount due to him will be transferred to his personal account. Then thereafter we will pass further entries. So importantly, this amount firstly I will transfer to Mr. X personal accounts for his settlement. Friends, you can notice the entry. 12% first debenture account debit 3 lakhs, 12% second debenture account debit 7 lakhs, trade payable account debit 2 lakhs, total amount due to X is 12 lakhs is transferred to his account to X account, being amount due to X transferred to his account. Now it is transferred for its settlement. Let us go step by step with the information. Point number B says Mr. X to cancel 7 lakh of his total debt, total dues. So I will say my entry will be X account debit to capital reduction account 7 lakh. Friends, you can notice the entry X account debit to capital reduction account, being cancellation of the amount due to Mr. X. X have sacrificed 7 lakhs rupees. So I have transferred. Let us see the next line regarding X. Mr. X to cancel 7 lakh of his total debt other than the shares amount and to pay rupees 2 lakhs to the company, means other than this cancellation he will pay you 2 lakhs. What will be your entry? Cash account debit, or I can say bank account debit to X account. Friends, you can see the entry bank account debit to X account. He has paid you additionally 2 lakhs. Now I need to find out how much is total amount balance due to X, for which I am issuing him 14% debentures. Student, you can notice earlier amount due to him was 12 lakhs. Of that 12 lakhs, 7 lakh is cancelled, that means 5 lakhs remaining, plus in sixth entry, he further paid you 2 lakhs. That means total amount now payable to Mr. X will be 7 lakhs, for which we are issuing him fresh 14% debentures. Friends, you can notice the entry X account debit to 14% first debentures. New debentures issued to him will be a 14% first debenture as question have given. Being fresh debentures issued to X, of course we have settled X account by this entry. Let us see the next information. Mr. Y to cancel rupees 3 lakhs of his total debt other than the equity shares. So whatever is due to him, firstly transfer to his account, and out of that we will cancel 3 lakhs. That means remaining 3 lakhs will be satisfied, and to accept new 14% debenture for the balance, which will be definitely 3 lakhs. So what things we have to do? Amount due to Mr. Y will be transferred to his personal account, number 1. Number 2, his cancellation, and number 3, for giving him new debentures. So 3 entries will come one by one. Friends, you can notice the entry 12% first debenture debit 2 lakhs, 12% second debenture debit 3 lakhs, trade payable debit 1 lakh, to Y's account 6 lakhs. Total due to Y transferred to his personal account. Now hereafter we will proceed. He has cancelled 3 lakhs of his debt. So your entry will be Y's account debit to capital reduction. So let us do that entry. Friends, you can notice I have passed the entry Y's account debit to capital reduction account because he has cancelled rupees 3 lakhs of his dues. Next entry is for settling his account. So we have settled remaining amount due to him, which is 3 lakhs, by issuing new 14% debentures. Friends, you can notice our last entry, that is 10th entry, Y's account debit to 14% first debentures. So in this way we have settled Y's account. Let us go with the next transaction. The amount thus rendered available by this scheme shall be utilized in writing off goodwill, P&L account, and balance to write off the value of the computers. So whatever amount available, that will be used to write off these three things. Let us prepare capital reduction account as a small working note, and with the help of that we will find out how much amount is available in your capital reduction account, small account. Friends, you can notice this capital reduction account is prepared with the help of journal entries. I have just placed the amounts over here, and I come to know that there is a surplus of 55 lakhs which will be used as per the instruction in the question. Question says that it is used to write off your goodwill first. It is used to write off your goodwill, thereafter P&L account, and thereafter the balance will be used to write off the computer. So let us see the balance sheet. What is the amount of goodwill and P&L account first? Friends, you can notice 55 lakhs will be firstly used to write off the goodwill of 20 lakhs, then P&L account of 20 lakhs, and the remaining amount of 15 lakhs will be used to write down your computers as per the question. Let us pass that last entry. Friends, you can notice our last entry, capital reduction account debit to goodwill account, to P&L account, and to computer. As per our working note, we have decided to write off 20 lakh, 20 lakh, and 15 lakhs from the respective assets. Being surplus of the scheme used to write off goodwill, profit and loss account, and the computer. Question is also asking you to prepare a balance sheet. So let us prepare a format of balance sheet. Friends, we are ready with the format. Here I have noted equity and liabilities. Under that, number 1 heading is shareholders fund. In shareholders fund we have a share capital. We don't have any reserve to write here, so no need to note down reserves here. You can notice in our second heading there is a long-term borrowing. There is only one item to write here, 14% first debenture. Sir, what will happen about our original debentures? They are already held by the X and Y, and for which settlement has been done. I have to write only a single amount of 14% first debentures which were issued to Mr. X and Mr. Y. If you can understand, rather if you remember, we have issued debentures of rupees 7 lakhs to Mr. X. and debentures of rupees 3 lakhs to Mr. Y. In that way, total 10 lakhs of debentures were issued. So I will directly write down 10 lakhs. After this, we have to write number 3, current liabilities. Under current liabilities, we have only one heading, trade payable. You can understand that Mr. X and Mr. Y were trade payables to some extent, and only that transactions were there. There is no further transaction, so I can show calculation in the bracket. Friends, out of 5 lakhs, 2 lakhs were held by X, which is cancelled. 1 lakh was due to Mr. Y, that is also cancelled. So your remaining trade payables will be 2 lakhs in your balance sheet. Thereafter, I have to write the total of the balance sheet. Friends, in non-current assets, we have a fixed asset. In that fixed asset, we have number 1, tangible. Second one is intangible. In intangible, we were having goodwill, which is written off. If this goodwill is written off, amount will be nil. In this way, we have completed our fixed assets, tangible and intangible. Next heading will be number 2, current assets. In this example, your current assets are nil, but if you notice, we have a bank balance. In our various entries, bank balance is recorded, that will appear as your cash and cash equivalent. Friends, for bank balance, I need to prepare a small working note. So we will prepare the working note. In your existing balance sheet, there was a debit balance of P&L account which is already written off. So only thing I have to write is your cash and cash equivalent, that is bank balance, for which I will have a working note. Friends, I have just posted the entries which are there. 10 lakh plus 2 lakhs, total bank balance which will appear in your balance sheet will be 12 lakhs. Let us write down that. Friends, in this entire balance sheet, we need to prepare only 2 notes, that is note number 1 for share capital and note number 2 for tangible fixed assets. So let's prepare notes forming the part of balance sheet. Friends, you can notice I am ready with the notes. Now I have to prepare note number 1 for share capital. Friends, you can notice your authorized capital is 75 lakhs. Continue. Friends, you can notice your authorized capital is 75 lakhs and now we have changed our shares to rupees 20 each. So I can assume 75 lakhs is the same capital which is authorized, but in future our shares will be of rupees 20 each. So I have to consider those many number of shares. Friends, considering capital of 75 lakhs rupees, 20 rupees per share, we will be having 3,75,000 equity shares authorized of rupees 20 each. Amount is 75 lakhs. Thereafter, I will write issued, subscribed and paid up. Issued, subscribed and paid up. Existing, they were having 1,50,000 shares. Let me show you. These 1,50,000 shares we have converted into 20 rupees per share. Let me show you that entry also. This is what the entry, 1,50,000 equity shares of rupees 20. Those will come in your balance sheet at rupees 30 lakhs rupees. So I will note down these details. Friends, it is how I have calculated my equity share capital, rather share capital. This I am placing in my balance sheet. Friends, I can take a total of liability side. 42 lakhs. Now here I have to prepare one more note, note number 2 for your tangible fixed assets. Friends, you can notice in your tangible fixed asset, we have not changed any amount of building plan, but computers we have reduced, we have written off by 15 lakhs. So those will get revised. These 3 amounts only will come in your tangible fixed assets. Friends, you can notice total of tangible fixed asset is 30 lakhs which I am placing in our balance sheet. Friends, you can notice your balance sheet tallies at rupees 42 lakhs. I just believe this simple question you must have understood, but still if you have any doubts, please put in the comment box. We'll try to resolve your queries at earliest. Thank you friends for watching the video. Before I close the video, I request you to share this video with your friends for their benefits. Thank you once again. God bless you.